Let me start with something very important. I am not a SEBI-registered financial advisor. This video is purely for awareness and educational purposes, based on personal experience and observations. Now that that's clear, it's honestly shocking that most of us spend 16 plus years in school, 3 to 4 years in college, countless hours preparing for interviews, but nobody teaches us how to protect our income, how to manage risk, how to build financial stability, and then we start earning and learn money lessons the hard way. Today, I want to share a basic financial structure every working professional should have. Not complex trading strategies, not crypto speculation, just foundational financial hygiene. First thing first, protect before you grow. Most professionals make this mistake. They start investing before protecting. That is backwards. Before you grow wealth, you protect risk. Buy a term insurance plan. If someone depends on your income, parents, spouse, future family, you need term insurance, not investment-linked insurance, not fancy bundled products, pure term insurance. Why? Because if something happens to you, your income stops immediately. A term plan ensures your family's lifestyle is protected, loans are covered, long-term goals are not destroyed, and the best time to buy it, when you're young and healthy. Premiums are lower, medical approvals are easier. Insurance is not for returns, it is for protection. Now on to the second item on the list. Don't depend only on office health insurance. Many professionals say, my company already gives health insurance. That is temporary protection. The day you switch jobs, take a break, face layoffs, your coverage disappears. Medical inflation is rising rapidly. Buy your own health insurance. Preferably, a family floater plan, bought early in your career. Locked in when you're healthy. Why early? Because once health issues appear, insurance becomes expensive or unavailable. Think long term. With basic safety done, now let's talk about building financial shock absorbers. We live in uncertain times. Layoffs, health emergencies, industry disruptions, economic slowdowns. Yet most professionals live salary to salary. Build an emergency fund, minimum 1 year. I strongly believe 6 months is minimum. 1 year is ideal. This money is not for investing. It is for survival. It gives you negotiation power, freedom to say no, confidence during layoffs, ability to wait for the right job. Without emergency funds, you take desperate decisions, and desperate decisions damage careers. With basic financial stability in place. Now let's come to the topic of future-proofing yourself. Start investing early. Start small. But start. Most people delay investing because, I'll start when I earn more. That day rarely comes. Even a small SIP matters. Compounding needs time, consistency, discipline. The earlier you start, the less pressure you feel later. And one important point, if you invest in mutual funds, avoid regular plans. Choose direct plans. Regular plans charge commissions that reduce your returns over time. Small percentage differences compound massively over 20 to 25 years. Understand what you're paying for. And finally, let's talk about diversification. Don't depend on one income. This is where career meets finance. Build multiple income streams. One salary is risky because your job is not permanent. It is rented stability. Multiple income streams don't mean quit your job tomorrow. It means freelancing, skill monetization, content creation, consulting, investing income. Even small second income reduces fear. And when fear reduces, confidence increases. And confident professionals grow faster. Remember, Financial stability equals career power. Let me share something important. Most professionals think, once I get promoted, then I'll focus on money. But financial stress affects decision-making, risk-taking, confidence, negotiation power. When you are financially stable, you don't tolerate toxic workplaces. You don't panic during layoffs. You don't accept low offers out of fear. Financial discipline is career strategy. Let me quickly summarize. 1. Buy term insurance. 2. Buy your own health insurance. 3. Build one-year emergency fund. 4. Start investing early. Direct plans. 5. Create multiple income streams. These are not advanced strategies. These are basics. And basics, when ignored, create long-term regret. If this helped you, share it with someone who just started earning. Because nobody taught us this. And someone needs to say it calmly and clearly. This is Corporate Growth Hacks, where we don't just work hard, we work smart.